And I've been talking about new all-time highs to these upper trend lines in the weekly time frame. I've been talking about a CPI rally, complete these divergences. I told you last week and this week, again, we're going to get the rate cut estimates for 2024, and that was likely going to be downsized to one or none. The market would eventually sell off with that with a post-Fed sell-off. It's like all of that is playing out. We'll see if we get a reversal now and a post-Fed sell-off. We got some topping tails on the daily chart that may be it, but this divergence here, we're coming up, we're slamming up into the trend line. I told you we might overthrow it here just a little bit. And again, maybe if I include the shadow right here, we're slamming right into it, really overthrowing it. But it looks like we're just overthrowing it just a little bit. Again, we've got these divergences going on. Look at the MACD in the most recent price action. It's forming a divergence. I've talked about this with the Awesome Oscillator. The Awesome Oscillator on NASDAQ in the weekly time frame. It's forming a divergence. We still got a green bar. We start a reversal this week. We could a topping tail, have a red bar this week or next week. You got a divergence on the MACD. Again, I do expect a reversal. Major resistance levels. For the S&P 500, you've got the divergence with the Awesome Oscillator, just like on the RSI, and the MACD is doing it as well. It is highly probable we are going to get a reversal off of this resistance area. Again, could have a topping tail this week and start a reversal. Could do it next week with the post-Fed sell-off with a reversal surrounding options expiration. It could play either way. I expect a post-Fed sell-off. The market's been turning with the Fed meetings. There's no denying that. I've shown you the chart. I'll show it to you again. These divergences in mind on the MACD and the Awesome Oscillator, you even have on the stochastic here as we look at the RSI briefly. These charts, nearly every single video. Quickly here with NASDAQ, again, these divergences led to reversals. This one here, the top over in 2021. This one, the bottom. This one, the July peak over here. This one right here, our most recent top there in March. Now you have a larger divergence that has formed. This will likely lead to a reversal rather than a pullback correction move. Now, I told you the S&P was coming up to this trend line. I told you it might overthrow it, might turn down off of it. It's overthrowing it. Again, we'll be looking to see what the close looks like by the end of the week. And again, it may be if we peak today, we turn down until we have we get a topping tail here in the weekly time frame, or go a little higher and still get some kind of reversal, either closing at the trend line or below it before the week ends. Bitcoin did that when we peaked the last time around in March. Bitcoin has been doing exactly what the S&P is doing, although it has not moved to new highs yet. It still could. But again, the divergences have formed. I told you we were going to go a little higher and slam up into this level. We never did reach it a few weeks ago, and I told you we were still likely going to do that. That has now happened. And so your divergence is now completing or coming to a conclusion not too distant future. Again, the divergence over here gave us a top and a reversal. Right now, you have so much complacency that will likely form a top right here. I told you back in March that, again, before we ever hit the 20-week moving average, before we ever had the sell-off, you're either going to get this, where you get the lower high in that 20-week moving average and bounce, or break the 20-week and get a feeble rebound. You're going to go down to the 20-week and bounce and go get a higher high and likely come up to this upper boundary or even overthrow it and form the divergence on the RSI. One of those scenarios. We're getting, again, the divergence scenario. Over here we got the lower high scenario. Over here we got the divergence. I told you it was going to be one of those two scenarios that sets up a lower high or a divergence. Bullish divergence here gave us the bottom. This divergence is likely going to produce some kind of top. I think it'll form a head and shoulders pattern very similar to what formed back over here on the S&P 500 at the 2022 top. So I think that could be under construction right here. Signals with momentum and the trend both remain bullish. That's probably not going to last too much longer. Again, divergences are forming, and we're reaching the target levels. So again, I'll be watching for momentum to shift first. We can see that in the coming days ahead. We close back below that upper Bollinger Band on the S&P, or do we get a couple of closes above it? Over here, we closed above it, and then we closed back below it, and then couldn't get back above it. We actually went 3 points higher here, but NASDAQ and the Dow peaked that very day, the day after the Fed meeting. Here we closed above it, went sideways, then corrected. But you closed above it, you went a little bit higher, Again, I'll be watching to see how it unfolds here. When we close back above the upper Bollinger Band, it could mark the beginning of a reversal. Traction with the bands told us something was about to happen. I told you it was likely we were going to go up and hit the levels of resistance we're at, back above the band, and that is what has happened. Please support the channel with the link directly below. That allows me to be able to provide you this information. The charts, you like the indicators, please let me know that by supporting the channel. Take a moment to do that. I would really appreciate it. Follow the link below to take you to a secured site. You can donate any amount you want. Take a moment to help out. Be greatly appreciated. Thank you for your consideration for that. Again, got a topping tail today. Signals remain bullish. Momentum is bullish. The momentum line is still bullish. The ribbon, the trend. If we begin to see the start of a reversal, we'll be watching to see if momentum signals begin to flip. If they do, that can flip the trend signals very quickly. Take out the lower boundary of the cloud. See this line representing the trend taken out. When we drop back below it, we got a sell signal. When we got back above it, we got a buy signal. It represents the trend. You take this level out, you take this level out, you're going to start a bigger sell-off and likely back towards this 4,900 area. So signals remain bullish. Got a topping tail. We'll see what becomes of that. I don't expect them to stay bullish for very much longer. Maybe they start turning this week, maybe next week, but I do expect a post-Fed sell-off. 5-leg push higher could now be coming to a conclusion. We'll be watching if we start flipping momentum either Thursday or Friday, some point next week. Now, I told you the S&P was going to go make new highs, finish the divergence in the weekly time frame. Happened. I told you the S&P was going to close above the upper Bollinger Band and move to new highs. That's now happened. I got a topping tail today, so that might be it. It may not. I told you we were going to get a CPI rally. That has now happened. It was today's rally, why we gapped higher. The cool inflation report told you earlier this week and last week, we're going to get the economic projections out of the Fed. We're going to get the new estimate for the Fed funds rate 2024, 2025. And I told you nobody expects that that is going to be lowered down. The dot plot obviously was showing 3 cuts 2024. Fed fund futures before that was spring at 2. Talked about that previously earlier in the week. Told you earlier this week and last week it was either going to go down to 1 or none. And that is what has happened. The CPI rally that I talked about. Got the Fed reducing the amount of rate cuts for 2024. That has now happened. At the rally that I was talking about, the resistance levels above the upper Bollinger Band, I told you we could overthrow these trend lines, end up getting a topping tail by the end of the week in the weekly time frame. Topping tail here today, so again, we'll be watching that with the S&P 500. But the thing I've told you has now happened. The thing that's going to happen is now a reversal post-Fed sell-off, and eventually we're coming back down to this low right here. By the time we reach it, we'll probably be having the 200 period down at this level here in the 4,900 area, and we'll get our right side of the head formation probably going into the July meeting where we can bottom, get a rebound back up, and this pattern could form, this head and shoulders pattern, and we could rally going into the next meeting, set up a lower high in this 5,200 area or so, started reversal. It is very, very possible that the stock market, that the stock market is forming a major top. We are at major levels of resistance in the weekly and the monthly time frame, long term, going back from 2007, the 2000 top, these trend lines I've talked about, and again going back, S&P back to 1929. Dow back to 1899, 125-year trend line. You got long-term resistance where tops in the past have formed, and we're right there. We're going to get the wholesale inflation tomorrow, but today we got the consumer price index. Came in better than expected. Came in on the cool side. I told you that it was going to come in on the cool side. Predicted that we'd get a rally, a CPI rally, take us above the upper Bollinger Band on the S&P 500 and up to the resistance trend line. And again, talked about it even overthrowing that level, which it is now doing. It closes topping tail before the end of the week or start a reversal next week. We have options expiration next week. But again, I expect a post-Fed sell-off. Market has been turning with the Fed meetings. Now, the CPI, it was expected to come in on a month-over-month here at 0.1. Came in better. Came in at 0.0 on a monthly basis. The month-over-month for core came in at 0.2. It was supposed to come in at 0.3%. So they both came in better than expected. The year-over-year came in better than expected. It was supposed to come in at 3.4%, the same as it was at the previous month's year-over-year number. Came in better at 3.3 with the headline number. We got the core year-over-year, and that came in better than expected. That was supposed to be lower than the 3.6 at 3.5. Came in at 3.4. So you had a cool report. The numbers came in better than expected. The CPI rally. I told you we could get the rally with CPI, reversal with Powell, or a rally with both post-Fed sell-off. Doing what I told you it was going to do, closing above that upper Bollinger Band, slamming up into the trend line and overthrowing it on the weekly chart. When I say a post-Fed sell-off, that means after the Fed. Sometimes, happens the couple of days after the Fed, the Thursday, the Friday, we start seeing the reversal. See that this week if we get a topping tail on the weekly chart, closing at the trend line or below it. Coin did that when it hit the peak in March. It's also possible that it happens the following week. As I said, I expect that there's going to be a turn, peak, and a reversal with this FOMC meeting. That means it's going to happen the exact moment? Necessarily, and that's why I talk about a post-Fed sell-off. It's very, very common. Please keep that in mind. But I do believe that a topping process is completing negative diversions on our weekly charts now. See if today's high is it, or if we go a little bit higher, get a little bit of a topping tail. Again, there were sellers going into the rally today, and we can have more of that tomorrow. Try to rally further. We got the FOMC rate decision. Again, rates remaining the same as expected. No rate cut. We have Powell's conference. We have the statement. We had a rather hawkish statement. And I told you last week. I told you earlier this week. We're going to get the estimate for the Fed funds rate. And I told you that was going to go down to 1 or none for 2024. Market was expecting it would go from 3 to 2. It went from 3 to 1. Caught the market by surprise, but there's not this big dramatic sell-off immediately. Moved off the highs of the session and see the market collapse. Hawkish statement. Talk about a post-Fed sell-off. Market really ignoring this really bad news for right now. It's not going to. Okay, I told you this was going to happen, that we're going to see the Fed lower the amount of cuts, 1 or none. We got 1. See a post-Fed sell-off. I told you last week, earlier this week, that would likely be the catalyst for the sell-off because I expected the CPI to come in cool side. It's been rate cuts moving the market up and down. Just say this real fast. The Fed has lowered now expectations. Remember, earlier in the year, Fed fund futures were pricing in 7 cuts for the year. I told you that was totally out of touch with reality. We are, before the year ends, likely going to see the commercial real estate crisis begin at some point. Banks have huge exposure to the commercial real estate sector through loans, through mortgage-backed securities, indirectly. Well, the Fed says, we may just do 1 cut. That may not be the case if we start seeing a banking crisis. Just keep that in mind. That is coming down the pike. That is the next crisis, and it's going to be worse. The financial crisis, the banks have massive exposure to the commercial real estate sector. Again, the Fed meetings have been calling the turn in the market. Wouldn't ignore this. Again, we've had this rally to new all-time highs. We were going to go up and hit that upper trend line in the weekly time frame and even overthrow it. We are. We're going to close above the upper Bollinger Band, that we're going to rally on the CPI data. Also telling you the Fed meetings have been calling the turns. The last meeting marked the bottom, okay, with the higher low. Inverted candlestick, back-to-back bullish candlestick. The FOMC meeting in March, it marked the top. NASDAQ and the Dow peaked the very next day. S&P turned down. The very next day it peaked and then it turned down and it went 3 points higher to form a divergence. The top, little double top I talked about on the intraday charts at that time. Again, the bottom over here, the top over here, continuations. The Fed meetings mark the tops, the bottoms, the continuations of the trend. It's either going to be a continuation of the trend or a top. It's likely not going to be a continuation of the trend because you've got negative divergences in every single time frame. You've got the market very, very overbought, slamming into major resistance with the long-term chart. So it's likely going to mark a top. Reversal. Well, more about the S&P in just a moment. Again, I told you that the dollar was bottoming. Again, it sold off with the CPI and then it rebounded with the Fed, down about 0.75%, and we only ended down by 0.45%. And again, we've had the breakout. We're in backtest mode right now. You got your double bottom. Again, we're likely going to form a top right here. Maybe the peak was in today. Maybe it wasn't. If we form a divergence, it wasn't. If we form a divergence on the 60-minute chart, then that could possibly be it. And I told you we had this new channel. And again, we came down. We broke this trend line to expand and to this upper boundary. And you got a really nice looking channel. We've had the breakout of the downtrend in the weekly time frame, the back test, and now the dollar's going right here. This is really bad for the stock market. It has a negative correlation with the dollar. You have a breakout back test, and then now you're getting our bottoming tail from last week. Our bottoming tail, we're going to be watching to see if it ends up being confirmed this week, going forward into next week. But that's very troubling for the market. And again, we're going to see what the Fed just did. We're going to see the dollar rise. We're going to see the 10-year yield rise. Because we're not seeing this major sell-off immediately, the Fed day, people, again, it's going to happen. Again, it is being lulled into a false sense of security. I told you before we ever got this Fed meeting, that was going to be the issue. The Fed was going to reduce the amount of cuts in 2024 to 1 or none, and they did it to 1. And that may change if we start seeing signs of the banking crisis. When we start seeing signs of the pandemic, the Fed quickly reversed themselves. QE infinity and beyond. We could see something. Now, I told you yesterday we had formed a bull flag. I showed it to you on the 60-minute chart. Here it is on the 5-minute chart. We had formed a bull flag, and I told you expected to push above the upper Bollinger Band and a rally with the CPI because of the bull flag that had set up on the intraday charts. Formed another one right here and tried to get a breakout, formed a little tiny divergence and sold off. I'll be watching to see what happens on the 60-minute chart. Again, we got a little topping tail, S&P, so that might be it. Still possible we get a divergence on the RSI. I'll be watching to see how it unfolds. It can unfold either way. Here it is on the 15-minute chart. Again, a possible little bull flag, and hang on, my trend lines moved on me. This program, sometimes when you hit save, the trend lines move on you. But again, we broke out, and then it failed, and then we came back down. So we're here at gap support. So I'll be watching. Do we go down and fill the gap and try to come back up, or is that it? Or do we bounce and then come back and fill the gap and form a divergence here on the 15-minute chart, maybe on the 60-minute chart? But again, I expect a turn. It can unfold in a couple of different ways. Right now, we rallied, and gap support at the moment is holding. I'll be watching this gap right here. Again, you always want to watch a gap. You get a gap and go, a gap and fill, or a gap and trap. Right now, we've got the gap, and then we came back and we tested gap support. We'll see if it holds or not. Do you get the gap and fill, or do you get the gap and trap and that's it? Or is it gap and go and we continue and maybe form the divergence? So again, the jury is still out on that. Be watching. Again, the series of bull flags I've been talking about in this triangle over here, again, have led us now up to that upper boundary that I've been telling you that we are going to go to. The breakout of this trend line here, then we formed the pennant pattern, the little triangle that had an upward resolution. Talked about that at the time. And then we broke through the resistance zone here on the intraday charts. We formed another bull flag ahead of the Fed. The CPI data told you that's why I thought the CPI was going to take us to a new all-time high and above the upper Bollinger Band, and we get a CPI rally. All of that happened. And I think you're going to form a topping process. Is it done right here, or is there more work to be done? We'll be watching for clues. Close above the upper Bollinger Band. I think it's going to reverse very soon. Possibly it may have started with the topping tail we got on the daily chart today on the S&P 500. Question now, is the S&P done or not? Could still get a divergence here in this most recent price action. This last divergence gave us the bull flag. I told you we expected still higher prices above the upper Bollinger Band and hit the trend line of resistance in the weekly time frame. We did that now. our bull flag, and now here we had this push higher. We turned down and we went slightly higher. I think it was just by a point or point or two, point and a half, something like that, just slightly higher. You've got the possibility of this divergence here on the MACD, and again, you may just confirm a lower high later here, or you may form a divergence right here, right now. I'll be watching the gap. Does that take us back down, and then do we just get a lower high? It could be. Today's high was it. Did you hear what I just said? It could be that today's high was it. It can unfold that way, get a topping tail, but the candlestick's meaningless in the daily time frame. Get a topping tail unless it's confirmed. We got a topping tail here. We rallied, we pulled back, and we got a little topping tail on the 60-minute chart. Now, if I bring it in closer, you can see it's a little topping tail here. Again, it's possible that is it, but it's also just as possible that we end up forming a divergence here in the next day or two, 3 on into early next week again, and still end up getting a post-Fed sell-off. It may play out immediately. There may be a delayed reaction. Great Scott, did you hear what I said? Post-Fed sell-off may not happen immediately. It may take a few days and still happen. We'll see if it happens immediately or not. Here we'd have to take out the momentum line, the purple line, the momentum cloud, and then start dropping below the 50 over here, and then come back and break this trend line down here. Again, we're going to start a reversal. I'll be watching to see what happens. With the rally, momentum is at extremes on the 60-minute chart again for the S&P 500. So I'll be watching to see if it rolls over. Is that it? Try to form a divergence on the RSI. Here, if we rolled over, we would have a divergence. But on other indicators too, like the MACD, the RSI, though, really higher. So again, you do have a divergence here in the most recent price action, some indicators. But we're at extremes. If we roll over, could begin to see a sell-off immediately. We'll be watching to see happens Thursday and Friday, and again, back and fill the gap, and we start selling off. Could have a topping tail on the weekly charts for the week ends. While the S&P is pushing higher, you also have this little miniature head and shoulders pattern that could be forming here. And again, look at the divergence with the Pring parameter. Pring parameter is making a lower high. It's not rolled over yet. By the time it does, the top will likely be in, but it's diverging from the peak over here. And I told you with this pullback right here that we saw momentum signals turn bearish, but the trend signals remain bullish. So again, I still expected price to go higher, close above the upper Bollinger Band in the daily time frame, and to hit the upper channel line. So again, a little miniature head and shoulders could start forming here. But as what I was looking for is, again, I believe that this is a wave 4 right here, and I think that we have 5 here, 1, 2, 3, this whole thing being 3. And this 4, and that was our bull flag. And now, again, I told you I thought we had 5 here, and I thought that this was 3. That's why I told you I expected a CPI rally. This could be 4, and we could get 5. It could be done with this topping tail here on the 60-minute chart. That's possible. That formed a little tiny divergence. That could be it, but it could also be that we get one more push higher and get something like that. I don't know which way it'll play out, but could play out that way to better form a divergence, the intraday charts, but it could also be that we just turn. We did get a 7 of a 9 count. Still possible that we complete it. Could be that get it in the daily time frame if bar 8 or 9 is the high of the count. So again, I'll be watching what becomes of this topping tail. But you got a shooting star. We rallied and we reversed. I told you we were going to close above that upper Bollinger Band. We did. NASDAQ did it yesterday. It got another close above it today. Watching for the next close below the upper band. It could be we go up and then we begin to reverse back down and again move towards this level or eventually towards this level. You got a little miniature head and shoulders there, but one back here to the 4,900 area. Too early to say if either one of them will play out, but they are possibilities. So again, did we just top with this topping tail? That's possible. Confirmation and a follow through. We'll be watching. We'll need momentum signals to turn back to bearish. Now we got a 7 of a 9 count here in the daily time frame that may or may not play out. This bar is the top, and we start seeing a price flip where we start closing below the bar from 4 bars ago, but it could still play out because the bar from 4 bars ago is way down here. 1, 2. Well, tomorrow's bar would be 1, 2, 3, 4. It's way down here. you'd have to close below it. We could get a big sell-off, price flip in the next day or two, but it's still possible to form a divergence on the intraday charts before we turn down. So keep that in mind. Or we see futures go higher, but then the market does not. Futures overnight, we'll see. Rising wedge now with that peak that we hit today, a rising wedge. We could draw a boundary, an upper boundary, a lower boundary, and you have a rising wedge that's likely going to end up giving us a reversal back into the July 31st meeting. That'll probably look something like that. And quickly, the Elliott wave count, the 1, the 2, the 3, the 4, and then again 5. And I think we have 1, 2, 3. The sideways move was 4, and then now 5, and 5 may or may not be done on that 60-minute chart that I've been talking about. It's possible it's done. What I found interesting is on the 60-minute chart, we completed a 13 count there with the first high that was made, and then we turned down and we went back up just a point and a half or so, or point, something like that, point or two above the previous peak, and we turned back down. So again, is what I'll be watching is what becomes of this 13 count. We may, again, get one more thrust higher and then turn. That may be it as well with that late day push back up and then turn back down with Powell there. So again, I'll be watching the gap. Does this mark a peak? But you've got a 913 reversal pattern now. We may overthrow the 13 a little bit more and then turn, or we may just turn immediately and have the topping tail play out as a reversal pattern in the daily time frame. We'll see how it unfolds. I wanted to show you that in the 60-minute time frame. Again, we have a 7 of a 9 in the daily. If it drags out a few more days going into next week, then maybe we complete the 9 count in the daily. But again, as I've been saying, you can get an immediate reversal with the Fed this week or, again, following week, but I do expect a post-Fed sell-off, and today may have been a reversal bar with the Fed with our topping tail. Same thing here on the 60-minute chart. Again, we moved up to a new extreme here. You might get a divergence or a confirmation of a lower high here, one or the other. Again, so even if we go back and fill the gaps, it might look something like that. We don't have to move to new highs. Again, it's very possible that turn without doing that, but it is still a possibility. Again, I've drawn a trend line right down here, and I've drawn a parallel boundary with that right here, and we came up right to my parallel boundary here and slammed on the brakes again. On the NASDAQ, again, possible 1, 2, 3, 4, and then now 5, and maybe that's completing. Maybe it's not quite done yet, but maybe it is done. Again, we went slightly higher today, so again, the smaller fifth wave here, it looks like it might be possibly done. I told you if we still pull back, it still might be something like that, where this is 4 or 5 in this more recent price action of this larger wave right here, of this larger 5-leg push higher right here. The microwave is speculation, so keep that in mind. Resistance here, so I'm looking for a reversal in this area, and it can unfold in a couple different ways. Just looking at resistance and divergences if one forms right here in the more recent price action. Dow's forming a bear flag at the 50% retracement. We sold off, we went back up to it. I told you that if the Dow gets a bigger rally up to the 61-point Fibonacci, it might establish a lower high. If that still happens, then again, the rally may not be done yet with the S&P and NASDAQ, but again, possible bear flag under construction here on the Dow. The MACD is rolling over, so again, maybe that's all she wrote. We'll see what happens. Has a possible double bottom pattern, or double top pattern, pardon me. Daily time frame, this is the second peak over here. This is the first peak. If I zoom out here, over here, this is our double top pattern, and if we get a lower high here, a Fibonacci retracement, I'll be watching the confirmation line down over here. So we'll see what happens. The Dow gapped higher, stalled up the 200 period moving average here in the 60-minute time frame, and turned back down, coming back towards the support trend line here. Going back to the NASDAQ 60-minute chart, I showed you the RSI could form a divergence. Well, we're getting a larger divergence developing here on parameter, possible nice-looking channel. So again, we'll be watching that. Again, you could get an immediate reversal, could get a delayed reaction, could play out either way. For close back below those upper Bollinger Bands, let's take a look at NASDAQ daily. Again, we're closing above the upper Bollinger Band for the second day in a row. I told you that was going to happen. It's happening. You got a possible rising wedge. You got a possible topping tail. That could be it. It may be that we dance around this level a little bit more and then turn and form a divergence on of the 15-minute charts and the 60-minute charts, or sell off a little bit and then come back up and do it, one or the other. That's certainly possible that a divergence formed there. It's also possible that we, again, by the end of the week, have topping tails in the weekly time frame and start to sell off and move back to fill the gaps and so forth. Again, possible head and shoulders here. Eventually, I think we're headed back down here to the 200. 200, again, by the time we reach it, could be above this level. This is where I think we're eventually headed. I think the divergence will complete right here. I think you've got a very nice looking head and shoulders pattern.